Another crypto firm almost bites the dust. Genesis is the latest of the crypto family to be falling into a downward spiral into the void. If these guys don't get some major funding anytime soon, they could be saying their goodbyes. The recent controversy of FTX had a ripple effect on the crypto empire. Genesis got caught by the horns, apparently losing millions in moments. Let's dig into the details. Starting off, Genesis may not immediately be going down. According to Bloomberg, Genesis, a digital asset financial services provider, may be in deep water as it seeks to obtain new cash for its lending section or risk bankruptcy if it cannot. We have no immediate intentions to enter bankruptcy, a Genesis spokeswoman told TechCrunch in an emailed statement on Monday. They also said that their objective is to address the current issue amicably, without the necessity for bankruptcy. Genesis continues to have productive discussions with creditors. According to the block, Genesis reduced its capital campaign objective by half, from $1 billion to $500 million, fearing insolvency if it does not receive the funds. Previously, on November 10th, the business tweeted that it had $175 million in frozen money in its FTX trading account, but sought to reassure consumers that the locked amount did not impair their market-making activity. Moving on, FTX left a big dent in Genesis. FTX, which was once valued at $32 billion, went bankrupt this month amid allegations about whether founder Sam Bankman-Fried mismanaged customer assets, and its demise is resonating across the cryptocurrency sector. FTX's new management team is set to appear in a Delaware courtroom for the first time on Tuesday as it seeks bankruptcy protection. Bitcoin, the world's most traded cryptocurrency, was up 1.5% on Tuesday at $16,022, but it's lost approximately 65% of its value since 2022 as part of a so-called crypto winter for digital assets. According to Bloomberg News, Genesis, which has offices in Fresh York City, London, and Singapore, is having difficulty acquiring new capital for its lending section and has told investors that they may declare bankruptcy if further money is not secured. According to the story, which claimed sources familiar with the situation, the crypto investment bank has spent the previous several days attempting to raise at least $1 billion in additional capital. The Wall Street Journal reported on Monday that Genesis requested funding from cryptocurrency exchange Binance, but the latter rejected owing to conflict of interest issues. Next, reporting agencies caught wind of the crypto shakeup too. Binance has refused to comment. Apollo has been approached by Al Jazeera for comment. Genesis Global Capital, one of the largest crypto lenders, froze customer withdrawals last week due to a liquidity deficit caused by an increase in withdrawal requests following the collapse of Sam Bankman FTX. The collapse of FTX, the third largest crypto exchange, earlier this month rocked the crypto industry, triggering claims of fraud and incompetence, as well as analogies to Lehman Brothers' 2008 collapse. In an interview with Vox last week, FTX founder Sam Bankman-Fried, who stepped down as CEO earlier this month, claimed he regretted filing for bankruptcy and blamed authorities for failing to safeguard clients before appearing to backtrack from some of his remarks. Bankman-Fried and many celebrities who supported FTX are presently being sued by investors in an $11 billion class action lawsuit. According to reports, the U.S. Department of Justice and the Securities and Exchange Commission are also looking into whether Bankman-Fried or his business broke securities laws. Further, Genesis is having a hard time raising cash. According to persons familiar with the situation, Genesis is struggling to find new capital for its lending section and is warning potential investors that if its attempts fail, it may have to declare bankruptcy. Genesis, which is facing a liquidity crisis following the bankruptcy filing of crypto exchange FTX in November, has spent the last several days seeking at least $1 billion in additional cash, according to the sources. This includes discussions about a prospective investment from crypto exchange Binance, they added, although financing has yet to materialize. Reuters previously reported that Bankman FTX, Fried's parents, and top employees of the bankrupt cryptocurrency exchange purchased at least 19 homes in the Bahamas valued at over $121 million over the last 2 years, according to official property records. Attorneys also stated that Binance's July 2021 sale of FTX must be investigated. Separately, a late Monday filing by Ed Mosley of Alvarez & Marsal, a consulting firm assisting FTX, revealed that the company's cash position of $1.24 billion as of Sunday was significantly larger than previously estimated. It includes around $400 million in accounts tied to Alameda Research, Bankman-Fried's crypto trading business, and $172 million in FTX's Japan subsidiary. Additionally, Gemini and Genesis are in the boat together. GBTC's share price was dropped 77% in 2022, compared to Bitcoin's drop of 65%. While GBTC has increased by 1,000% since the end of 2015, the world's largest cryptocurrency has increased by more than 3,600% within the same period. According to Bloomberg Bloomberg Intelligence, GBTC has more than 3% of all mined Bitcoin held by Coinbase Global. Grayscale published a statement from Coinbase Chief Financial Officer Alicia Haas last Friday, stating that the trust's assets remain in cold storage and cannot be leased out. There's a lot up in the air right now for companies next in line after FTX. We hope they stay stable enough to remain in the game, but the future isn't looking too bright for these companies in the aftermath of it all. Now, Estonian duo accused of $575 million cryptocurrency scam. Two Estonian men were detained in Tallinn for their suspected involvement in an enormous Ponzi scam that deceived cryptocurrency investors of hundreds of millions of euros. Sergei Potapenko and Ivan Turgin, both 37, are accused of defrauding hundreds of thousands of investors between 2015 and 2019. The most severe violation was their solicitation of investment in Hashflare, which they said would allow clients to rent a share of the firm's cryptocurrency mining activities in return for the virtual money it generated. Customers are claimed to have put more than $550 million into the company over a 4-year period. However, while the Hashflare website claimed they were earning large profits, the firm's equipment purportedly conducted Bitcoin mining at a rate of less than 1% of the claimed computational power. According to the Department of Justice, when investors wanted to withdraw monies, the pair either refused or compensated them in virtual currency obtained on the open market. In 2017, the two allegedly established a second fraudulent investment scheme. This time, it was a bank specializing in virtual money that promised its revenues would create dividends. Up next, both Estonians cleverly came up with their own fictitious bank. Potapenko and Turgin are reported to have raised $25 million for a fake bank called Polybius, although it never existed. The couple is reported to have used shell businesses and bogus contracts and invoices to acquire at least 75 residences, 6 luxury automobiles, Bitcoin wallets, and hundreds of cryptocurrency mining machines in both scams. Potapenko and Turgin are charged with conspiracy to conduct wire fraud, 16 counts of wire fraud, and 1 count of money laundering conspiracy. If proven guilty, everyone risks up to 20 years in prison. The collaborative investigation, which encompassed 100 individuals, including 15 from the American side, was described as lengthy and wide by Oscar Gross of Estonia's police cybercrime branch. According to Estonia's ERR news agency, it was one of the greatest fraud instances they had ever seen in Estonia. Authorities in the nation also cautioned that technology has expanded the potential of fraud. The lawsuit comes at a time when the cryptocurrency industry is jittery, following the collapse of the world's second largest crypto exchange, FTX. Moving on, FTX's impact isn't going away. The prices of major crypto assets continue to fall. Bitcoin prices have decreased 3% in the previous 24 hours as of early Monday afternoon, momentarily falling below the $16,000 level. Ethereum has dropped 6% since the same moment on Sunday, flirting with $1,100. Many smaller digital assets were also down by single-digit percentages in the last 24 hours. These developments prolonged recent falls in the overall market. Bitcoin was trading above $21,000 as recently as the first week of November, while Ethereum was trading above $1,600. This equates to losses ranging from a quarter to a third of their respective values. FTX continues to create high-profile news documenting the extent of the exchange's collapse. Lastly, what's next for crypto? Companies that have depended on the power of cryptocurrencies look to be the next domino to fall at this time. Bond investors are losing faith in the long-term sustainability of some of the most ardent supporters of digital assets. Long-term bonds issued by Coinbase Global have dropped dramatically this month, pushing yields into the double digits. Even Coinbase bonds expiring in the next 3 years have yield 17%, indicating that investors see a significant chance of default and are demanding greater prospective profits to compensate for that risk. That's a wrap for this video. Do you think the FTX disaster and aftermath are going to stabilize anytime soon? Let us know in the comments below. It'd be awesome if you gave this video a thumbs up, and please don't forget to subscribe for more scrumptious videos like this. See you at the next one.